That's right, guys. Time for another kinetic flow update. This is Spaykit, your OWL engineer. Let's dive in. Quick disclaimer, this is not financial advice. It's educational and it reflects our analysis, not a recommendation. In the next few minutes, I'll walk you through why the market is following our script to the letter, where the final distribution push could take us, and exactly what we're positioning for next. Let's start with Bitcoin. It's doing exactly what we expected, grinding sideways in the 80K to 93K range, sitting just above key VWAP support on painfully low volume. ETF inflows remain modest, spot demand is quiet, and conviction is thin. The textbook set up for one last distribution rally toward 103,000 to 110,000. Here's the thing, we think the cycle peak is already in the rear view at around 125,000 earlier this year. There's still a 25% chance we get a surprise leg to 150,000, but the weakness we're seeing points more toward rejection near 103,000, and that would open the door to a full bear market, likely bottoming sometime summer or October 2026. Which brings us to Ethereum, and the story just got a lot spicier. Fundstrat's leaked internal memo backs our view completely. We called the top back in early October, while Tom Lee was still out there pushing 10,000 plus targets. Wall Street's classic play is to manufacture one final rally into the 4K to 5K exit zone. But headwinds are building fast. The BOJ's fresh hike to 0.75%, endless retail liquidations wearing everyone down, and the MSTR index decision looming on January 15th. We're overdue for a bounce, but the clock is ticking fast. This shapes up as a quick in-and-out trade. We'd happily ring the register near 4K. Stay sharp on this one. That mounting tension around timing and headwinds flows straight into our overall market risk picture. So here's how I'm framing it. Our risk score ticked up to 2 out of 6, low moderate territory, after sitting at 1 2 weeks ago. That early December 1 billion flush did its job, crushing over-leveraged retail and resetting the board. Open interest is still high between 30 and 50 billion, but the structure looks healthier now with negative funding rates. The rally clock is ticking loudest around that MSTR news, though a US government intervention isn't off the table. Slim 10% chance we dip briefly to 76K on bad headlines, then catch a delayed Q1 bounce. Either way, conditions are cleaner than they've been in weeks. Let's zoom into altcoins. No alt season coming. We've been saying it for months, and the best outcome remains a sharp but short 200 to 500% bounce. BTC dominance sits heavy at 59%, classic risk-off concentration, and only 23 of the top 100 alts have beaten Bitcoin over the past 90 days. The trigger we need: Bitcoin pushing above 94,000, ETH reaching its upper targets, and dominance finally cracking lower. When it happens, expect a fast spike, perfect for scalps or exiting weaker memes before the bear really digs in. We'll be moving quickly, so pay close attention. Quick watch list scan. No fresh signals triggered yet. We closed Fartcoin at break-even, solid risk management. ETH remains top of the list with building momentum. Same for crypto-adjacent names like Metaplanet and Riot. On the quality alt side, we're tracking real spot strength in Aave, Hype, and CRV. If this window holds into mid or late January, we could see a violent 200% plus pump. Short, explosive, and gone fast. We'll enter the right setups the moment they confirm. Stay ready. Quick spot versus perp flow check. Still no aggressive spot-led buying across the board. Flows remain subdued and funding negative. The market is digesting, not committing yet. That's fine. It keeps the setup intact for now. Alright, wrap up. Everything is lining up for that final distribution leg across majors and select alts. But time is short and risks are rising fast, especially with MSTR in mid-January. Patience kept us out of the flush and preserved capital. Now we're coiled and watching for the trigger. When it fires, we'll move decisively. Before you go, a quick behind-the-scenes note. This update is built the same way we trade. Keep the signal, cut the noise. We're a bunch of techies, not your typical YouTubers, so of course we started experimenting with AI to help polish the voice and video. We're refining it every week, so the delivery will keep getting smoother and each update will get sharper. That's the Kinetic Flow update for this week. Stay tuned, Stay kinetic. This is Spake It, the Owl Engineer, signing off. See you next week.